Welcome. Today we delve into the details of the new New Zealand-India Free Trade Agreement, examining its key aspects and potential impacts. This agreement marks a significant step in the bilateral relationship between New Zealand and India. But what exactly does this historic free trade agreement entail? The New Zealand-India FTA aims to deepen economic ties, promote trade liberalization, and facilitate cooperation across various sectors. It's considered historic due to its broad scope, opening up New Zealand access to one of the world's fastest-growing major economies and setting a precedent for future comprehensive trade deals. Let's look at the key changes introduced by the FTA that directly affect New Zealand exporters. A core fact of the agreement is the commitment to tariff reductions on approximately 95% of New Zealand's exports to India. This promises substantial cost savings and competitive advantage. Horticulture exporters are set to gain specific benefits through immediate or phased elimination of tariffs on key produce, enhancing their presence in the Indian market. In contrast, progress on dairy market access remains limited. The FTA includes exclusions on certain dairy products, addressing sensitivities within India's domestic agriculture sector. Beyond goods, the FTA also focuses heavily on services and investment cooperation between the two nations. Provisions are included for easier cross-border trade and services, providing New Zealand service providers with greater certainty and market access in India. The agreement aims to enhance bilateral investment flows by providing improved protections and a more transparent regulatory environment for investors from both countries. Another significant pillar of the FTA involves provisions for mobility and labor, addressing the movement of people. New pathways are established for the structured mobility of skilled workers and students, facilitating easier temporary entry and providing opportunities for knowledge exchange. As with any major agreement, the FTA is met with both strong government endorsement and concerns raised by critics. We present both viewpoints neutrally. The government views the FTA as a catalyst for long-term growth, citing expanded market access and the economic diversification benefits of a deeper engagement with India. Critics, however, point to uneven sector benefits, particularly the continued exclusions on dairy, arguing that the FTA favors some industries over others. Concerns have also been raised regarding the potential implications for New Zealand's labor market and immigration policies due to the new mobility pathways. So how should we assess this major trade deal? Let's summarize the outlook. The FTA presents immediate tariff reductions, but its full impact will only be realized over the long term, depending on how various sectors adapt and utilize the new provisions. Does the New Zealand-India FTA truly represent a catalyst for long-term growth, or does it carry unresolved risks that warrant careful monitoring? We leave you to consider the evidence.